Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Pretty interesting times, really, as we sort of head into year end. Certainly, most people thought that with the Fed coming out and being sort of slightly less sort of hawkish and maybe a little bit softer in terms of sort of rate rises. Jay Powell came out and said that interest rates in the US now were sort of close to sort of neutral. We then had further talk over the weekend that Trump and President Xi had come out and sort of put a hold on tariffs for the next sort of 3 months while continued talks took place. That was enough to see the sort of market rally into year end. Well, just hold that thought as now concerns over sort of global growth. He really hit the US market pretty hard, and it's down, given back pretty much most of the gains it sort of made after the sort of Fed announcement and the sort of hope of the sort of trade deal with China. Which I guess now kind of makes the unemployment report on Friday US time pretty important. If that still shows a pretty strong number out there, it'll be interesting to see what the Fed sort of come out and do. Most people expect still to see a Fed rate increase in December. Now, if that is the case, and then maybe sort of two more in 2019, maybe the Fed is pretty close to sort of neutral rates and sort of putting the rate sort of increase cycle on hold. Now, if that is the case, then really it's a question of sort of looking at earnings and also sort of growth going forward. Certainly, the US growth is pretty strong. But obviously, it's the rest of the world that markets are a little bit concerned about. And so, just be very interesting to see the sort of next sort of data that comes out of China, also Europe as well. Europe's sort of quite interesting. On one side, you've obviously got the Brexit talks taking place. Supposedly there's a deal there sort of in place. The EU leaders have agreed it. Now it's a question of Prime Minister May getting it through the UK Parliament, which looks like it could be a pretty tough ordeal. But then on the other side as well, you've got sort of growing unrest in Europe. You see the latest demonstrations in France, supposedly demonstrating against a sort of a fuel tax, but that sort of morphed into then just sort of a more sort of general sort of discord and just unrest in terms of taxes, etc. But it has been enough for the French government to postpone the fuel tax hikes for 6 months while they have a review. Now, obviously, certainly in Europe, the worry could be that there is a spread of this sort of growing unrest, and that spreads towards sort of other countries, and then you have all of a sudden sort of morphs into sort of a mass gathering rather than just sort of an isolated section in one country. I suppose what is a little bit ironic is that if the market is sort of concerned about slowing global growth, then sort of the rally in oil in the last couple of days, sort of up around sort of $2.5 a barrel, seems a little bit sort of misguided. Certainly, oil has fallen pretty hard. It's come down from sort of $75 a barrel on WTI to sort of low 50s. But so we have seen a little bit of a bounce in the sort of near term. which again sort of makes the OPEC meeting pretty important. I suspect there'll be a little bit of talk about potential sort of not so much supply disruptions, but maybe just sort of cutting back a little bit on production, just trying to keep that price back above sort of 55 and closer to 60. Here in New Zealand, the government's still facing sort of fresh pressures out there, and at present their only sort of answer seems to be to have a review on the sort of situation. Little sort of coming through in terms of sort of hold card action. Still got sort of plenty of unrest there, and the sort of teachers on the sort of pay dispute. Nurses, okay, looks like they're sort of sorted, but there's still quite a bit of unrest out there in sort of the public sector pay ranks. You add that as well to a housing crisis. They announced a further review in terms of oil prices and gas prices. Again, sort of quite ironic that the reason why prices were increasing was because oil prices were increasing. Now they started falling. We haven't really heard too much about it. But as usual, if you are looking for income options, plenty of alternatives available out there. Call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.